Today, we're going to be talking about inflation. Inflation is a complex topic, but it's one that's important to understand, especially in today's economic environment. What is inflation? Inflation is a general increase in prices and a decrease in the purchasing power of money. This means that over time, you'll be able to buy less with the same amount of money. How is inflation measured? Inflation is measured using a price index, which is a basket of goods and services that are tracked over time. The change in the price index is then used to calculate the inflation rate. What causes inflation? There are two main causes of inflation: demand pull inflation and cost push inflation. 1. Demand pull inflation. Demand pull inflation occurs when there is too much money chasing too few goods and services. This can happen when the economy is growing rapidly and consumers have more money to spend. 2. Cost push inflation. Cost push inflation occurs when the cost of producing goods and services increases. This can happen due to factors such as rising wages, higher energy prices, or supply chain disruptions. What are the effects of inflation? Inflation can have a number of negative effects, including reduced purchasing power. Inflation erodes the purchasing power of money, meaning that people can buy less with the same amount of money. This can be especially difficult for people on fixed incomes, such as retirees. Uncertainty. Inflation can make it difficult for businesses and consumers to plan for the future. This can lead to decreased investment and consumer spending. Inequality. Inflation can exacerbate inequality, as it tends to hurt low-income households more than high-income households. How can inflation be controlled? Central banks use a variety of tools to control inflation, including interest rates and open market operations. Interest rates. When central banks raise interest rates, it makes it more expensive to borrow money. This can lead to decreased spending and investment, which can help to reduce inflation. 2. Open market operations. Central banks can also buy and sell government bonds in order to control the money supply. When central banks buy bonds, they inject money into the economy. When central banks sell bonds, they withdraw money from the economy. How to deal with inflation? There are a few things you can do to deal with inflation. 1. Invest in assets that tend to appreciate in value during inflationary periods. This could include stocks, real estate, or gold. Increase your income. This could involve getting a raise at work, starting a side hustle, or finding a new job that pays more. Reduce your expenses. This could involve cutting back on unnecessary spending, finding cheaper alternatives to the products and services you use, or refinancing your debt. Inflation is a complex phenomenon, but it's one that's important to understand. By understanding the causes and effects of inflation, you can make better financial decisions and protect yourself from its negative effects.